Welcome, everyone, to Vested Interest. This is Shane, and it is that time again. We are going to be turning the calendar from May to June. That's right, another month has come and gone, and we are going to be looking at, in this video, the three stocks I will be focused on in June. And you can see them here. Vale, Occidental Petroleum, and Comcast will be the three. These are the three smaller positions or smallest positions in my portfolio. So I want to build them out a little bit while they are down, and we will cover those as well as a couple others towards the end of the video. So make sure you watch till the end of the video so you can see those other positions as well that are potentially showing some undervaluation right now, at least in my opinion. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell as well so you're notified whenever I put out any new content. I do this video series where we take a look at the stocks I'm looking to buy as we enter a new month, once a month, as we exit the month that we are currently in, May, and enter June, and then it'll be June into July, July into August, so on and so forth throughout the year, so that you can see what I am going to be focused on. Now, that does not mean they are the only stocks I will be buying for the month, but they will be the ones that I primarily focus on for the month, unless they run up or some things change and other stocks pull back. There is the thanks button down below as well if you'd like to buy me a cup of tea and support the channel that way. Now, first up is Vale, ticker VALE. This is a mining company out of the materials sector. And as you can see here, it closed the week at $9.13, down 3.28%. It has been down for quite a while. Now, the analysts call it a potential buy. They see a price target of $12.66, which represents a potential 38.66% increase from the current price. It has a 52-week low of $8.06, so it's not too far off its 52-week low, and a 52-week high of $12.21. So big gap there between its low and its high. EPS, earnings per share, is $1.28 per share. Price to earnings ratio currently at $7.11 per share. Forward PE even lower than that at $4.73. It has a dividend of 83 cents on the year. They typically pay out 2 times a year, but sometimes 3, but their typical payouts are 2 times a year. So divide that by 2 to get their average payout. And it represents a dividend yield currently of $9.09. Their last ex-dividend date was March 10th, so we're well past that. They paid out on the 21st here, and they do have a earnings date coming up, or I'm sorry, let's cover beta of 1.06. So they are slightly more volatile than the overall market. Earnings date coming up July 24th, so tune into that if you want to know what's going on with their earnings report there. Jumping over here to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. I mean, I feel like this company is potentially undervalued right now. It's well below my cost basis, which we'll see here in a minute. But to look at dividend yield theory quickly, we look at their 5-year dividend yield average at 8.62%. Now, this looks like it's a little off. They're saying forward dividend is 14.6. Over here, they're saying 9.09%. Either one is well above their 5-year dividend yield average, so potentially undervalued, at least according to dividend yield theory. But this would also be why I recommend, like on my stock pick of the day video series, more than one source. These 2 sources that we're looking at on this page are coming to you from stockanalysis.com and Yahoo Finance. So again, this would be Yahoo Finance's number, and it's a little off from where stockanalysis.com has it. So I would look for a third source to verify what exactly the current dividend yield is. But either way, they are both, again, well above the 5-year dividend yield average, so speaks to potential undervaluation. Payout ratio of 60.47%. I like under 75% payout ratio for companies like this. Now, if it was a company out of the REIT sector, in the real estate sector, I don't mind above 75% because they are required to get some tax benefits to pay above 90%. Same thing with business development companies. Some closed-end funds as well typically pay well above 75%, 90, sometimes even into the 100 and 100% above because they issue more shares into the market. That's how they're able to do that. Now, jumping down below, I like to look at return on capital employed. I want 10% or better for this metric. They're sitting at 14.44%, so well above that there. EPS, I typically like above 5%. They did not have it listed, so can't look there. Free cash flow. Now, this is not looking good actually for the free cash flow. We are in a down cycle for material companies overall right now. A lot of them are pulled back, but you can see here going back to December 2022, $6 billion in free cash flow, down in 2023 to $7.2 billion. 2024 further decreased to $2.9 billion. Trailing 12 months, $1.1 billion. So definitely a continuing decrease in free cash flow. So we'd like to see that turn around at some point. Repurchase of capital shares, $6 billion out of the market in 2022, $2.7 in 2023, $409 million in 2024, trailing 12 months, $134 million. So again, not only the free cash flow decreasing, but their repurchase of shares also decreasing. Now, I am long Vale. I do hold 895.80462 shares, down 19.44%. As you can see, my cost basis is $11.33 per share, so well above where it currently sits. I'd like to bring this down significantly. So this will be one that I am going to, maybe 5, 6, 8, even 10 shares of Vale a week here through the month of November, as long as we stay down here in the 9, and I'd like it to even drop back into $8 per share range so we can really bring down this cost basis. And this is one of the smaller positions in my portfolio, less than 3% of my portfolio in Vale currently. All right, number 2. Next up, we have been adding to this one for a while. Comcast Corporation, ticker CMCSA, closed out the week at $34.57. Looks like it was actually up a little bit more in the after hours. Another one I am long on. All of these are existing positions. I think this one was just slightly above 3% of my portfolio, but still one of the smaller positions in my portfolio. And Comcast is out of the communications sector. Now, same thing. Analysts call this one a potential buy. Price target of $43.16. That represents a potential 24.85% upside, at least according to the experts out there that are taking a look at this. Earnings per share of $4.07. PE ratio, price to earnings, is very low at $8.50. Even forward PE is lower than that at $7.81. So forward projections even lower than where they currently sit. A dividend of $1.32. Now, this is a quarterly payer, so you can divide by 4 on this one to get the average payout per quarter per share, with a starting dividend yield of 3.82%. Ex-dividend date coming up July 2nd. Now, you can see it looks like they're going to pay out on July 23rd. So you want to be buying this one July 1st or before. Don't wait to the ex-dividend date. Buy it the day before the ex-dividend date or well before that, so you can make sure you lock in the dividend if you're interested in these companies. 52-week range as low as $31.44. Not too far off its 52-week low, not right up against it either, but definitely closer to its 52-week low than its 52-week high that was $45.31. A beta of 0.97, so just slightly less volatile than the overall market. Again, earnings date coming up July 22nd here, towards the end of the month in July. Jumping over to the right, again, I'd like to look at dividend yield theory to see if the company is potentially undervalued. It's just a quick check. It is not a deep dive into the financials like doing a discounted cash flow analysis or anything like that, but it is a quick check. And to do that, we look at their 5-year dividend yield average at 2.5%. We compare it to their current 3.85%. And again, you can see a little bit of a discrepancy, 3.82 over here, 3.85 over here. Pretty close, a lot closer than what we saw with Vale, but that's the difference between the two sites. Again, stockanalysis.com on this page over here, or on this side over here, and Yahoo Finance is this data right here. Stockanalysis.com data here, stockanalysis.com data here. Yahoo Finance data is where I got the free cash flow and the dividend yield theory data here. So again, potentially undervalued according to dividend yield theory, 2.5 compared to 3.85. And again, you can see here with the payout ratio, 31.03%, well below that 75% I'm looking for there, which gives them a lot of room to continue to raise that dividend, and I'm not worried about a potential dividend cut on this one. Dropping down, return on capital employed. Again, I want 10% or better here. So they're sitting just above that at 10.28%. EPS growth, I like 5% or better here, 7.93, and revenue growth of 1.44%. Jumping over to free cash flow, again, you can see December 2022 here, $12.6 billion in free cash flow, up in 2023 to $12.9 billion. 2024 down slightly to 12.54. Trailing 12 months 13.4. But keep in mind the trailing 12 months does account for some 2024 numbers. We're only entering into June here, so that would be definitely numbers January through April, but may not include all of May's numbers and definitely don't include any of June's because we're not there yet. Again, long Comcast, I do hold 320.22794 shares. Another one I am down on 12.09%, so I want to continue to build this out, bring down my cost basis while it is down. All right, and up third on our list is Occidental Petroleum, ticker OXY, out of the energy sector. Closed out the week at $40.78. Looks like they were down slightly in the after hours a little bit. An analyst called this one a potential hold, actually. They do see upside as far as their price per share, $51.06, which would represent a potential 25.21% upside. EPS on this one, $2.47 per share. Price earnings ratio at $16.53 currently. Forward PE just a little bit less than that at $16.39. The dividend is 96 cents per share, which would represent a potential 2.35% dividend yield. Their ex-dividend date, June 10th, is coming up here next month. We're still in May, so it's technically next month. But make sure, again, you're buying this June 9th or before. Don't wait till the 10th. It doesn't guarantee that you'll get the next dividend. Their payout is going to be on July 15th, which will be the following month. They do have a 52-week range at $34.79 for the low. So not quite right up against the 52-week low, but definitely closer to the 52-week low than the 52-week high is $64.76. Beta of 0.81, so slightly less volatile than the overall market. Earnings date was May 7th, so you can actually look at their earnings report if you want to go check that out on their homepage. Jumping over to the right, I like to look at dividend yield theory. Again, 5-year dividend yield of 2.83% compared to the current 2.32%. That actually, since it is lower than their average, speaks to overvaluation. This one is actually, according to dividend yield theory, potentially overvalued. I tend to disagree. They did have a recent dividend cut on this one, I think within the last 5 years, so that is impacting this yield overall, I believe. Payout ratio is low, though, at 36.44%, so well under that 75% that I'm looking for there. Now, this one is below what I'm looking for on the return on capital employed. Again, I want 10% or better here. They're at 7.63%. But the earnings per share growth forecast is well above what I'm looking for. I like 5% or better. They're forecasting 16.37%. Didn't have anything listed for revenue forecasted. Now, again, this one is very similar to Vale. Again, energy companies, much like the material sector, are very cyclical, and it looks like we're in a downturn as far as the cycle goes. But going back to 2022 here, you can see $12.3 billion in free cash flow. Big year in 2022. 2023 down almost half that, $6 billion there. 2024 further downturn, $4.4 billion with trailing 12 months at $4.4 billion. But again, this is 2025 numbers that we've seen reported out so far, plus 2024 numbers. Repurchase of capital shares, very similar to Vale as well. Decrease almost every year, except you had one increase from 2022, $3 billion, 2023 up to $3.4 billion, and then big drop off in 2024 down to $27 million. And it looks like that $27 million is still being reported out from 2024 numbers, though we'll have to wait to see what the rest of 2025 looks like. I am long all of these, so I do hold a bunch of Occidental Petroleum shares, 244.25737 shares currently. Another one I am down in double digits, 13.88% down. So again, trying to bring down my cost basis on these. This one is another one under 3% of my portfolio. So I'm going to probably try to bring these all up to around 3 to 3.5% of the portfolio as I add to them. Now, again, these will not be the only ones that I'm looking to add to. There are other positions out there, some in my portfolio, some outside of it, that I feel are still showing some undervaluation. Here is a quick list. There's other ones out there even beyond these, but these are some that I think currently are still showing undervaluation. Pfizer, Owens Corning. I might nibble on this one a little bit while it's in the 130s. Wouldn't mind adding a share or two here and there. Genuine Parts Company is not in my portfolio, but still feel like it's down. Same thing with General Mills, not in my portfolio, but still feel like it's showing some value. Chevron, another one not in my portfolio, but still seeing like it's showing some undervaluation. Now, I'm not adding to these right now, but I still think Alphabet, which Google, G-O-O-G-L, it is in my portfolio, still looks undervalued. Lam Research, same thing. Haven't been adding to this one lately, but still looks relatively undervalued in my opinion. Hewlett Packard, HP Inc., that one is undervalued. Leidos, it's getting closer to fair value, I'd say. NextEra Energy, same thing. Still feel like it's slightly undervalued, if not fair value. Cisco is another one. And Union Pacific is kind of bouncing between that undervaluation and fair valuation, in my opinion, as well. Let me know some other ones out there that you think that might be undervalued and what you are looking to focus on for the month of June. Would love to hear what other positions you are seeing out there in the market that you think, or that you are adding to, or you think that are undervalued. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. Let me know what you think of the positions I'm looking to add to the portfolio. Occidental Petroleum out of the energy sector, Comcast out of the communication sectors, and Vale out of the material sectors, that mining company there out of Brazil. Let me know what you're looking to add to your portfolio. What are you watching, maybe for further pullbacks? Again, would love to hear from you in the comment section down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one, which will be tomorrow, Sunday. I will put out my portfolio update so you can see what I added to my portfolio this week, what positions I'm looking to add to. And there are two more, folks. With the market being the way it is, I am going to continue to focus on SCHD, which is Schwab Strategic Dividend Growth ETF, excuse me, and VTI, which is just the total American stock market. So those two ETFs I will be continuing to focus on, as well as the three positions we covered. And again, there may be some other ones as the market conditions change. If we had a big drop, for example, and Google became undervalued again, under the 150 in some change that I have it currently, I would buy there, and several others. Well, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing during for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor.